Welcome back. So I'm back from Gastech, which was a massive, massive show. I think I heard 40, 50,000 people were there. This was the big show that the industry has puts on for itself, a big pat on the back. It was done in Milan, Italy this year. So it's a great place to have this show. Lots of parties, lots of good food, lots of people, lots of socializing. That's all good. But I walked away with a sense of unease. Beyond the glitzy facade of Milan and beyond the glitzy facade of so many of the booths, which were quite glitzy, a lot of them, I felt there is an impending crisis coming on. And I think I'm going to use the words of Alan Greenspan, the Fed chief, many, many years ago when he said, there's a bit of irrational exuberance. So, what does that mean? That means I think we are kind of losing sight of the plot here. The industry is actually growing too fast. There's a huge sense of FOMO, fear of missing out. Everybody is trying to get their projects across to FID. Everybody is trying to get their expansions to the FID. The project sizes that everybody's trying to get are getting bigger and bigger and bigger. And this to me is not a good sign. We are in the energy business. The energy business is incremental energy production to meet incremental energy demand. As I've said in my last couple of videos, we don't actually transition from one energy source to the other. We add the energy sources. So we in the gas industry should think about how we can meet the new demand coming up. And yes, there's going to be some replacement of things like coal, etc. But in the most of it, we're trying to meet new energy demand. And energy demand, yes, it's growing with AI data centers in the US and other places, and normal growth. And I've made a case in the past that there's a billion people in the world that don't have electricity and they need electricity. That's all correct. But that still doesn't mean that energy demand is going to grow dramatically faster than it has been over the last few years. And now we are seeing so many FIDs happening. I don't know how the numbers, because the numbers are a moving target, but there's 50, 60, 70 million tons of new LNG capacity trying to FID now, this year, and the next few months. And that just is way too much. I see this as a recipe for disaster. Why is this a recipe for disaster? Because we have two sides of any business. We have the revenue side and we have the cost side. On the revenue side, the general feeling around, if you talk to analysts, you talk to soothsayers, you talk to forecasters, consultants, is that gas prices are relatively low. LNG prices are relatively low. We are in a relatively low cycle right now. And no one is expecting that prices to suddenly spiral upwards in the next few months. Maybe in the next couple of years it might, but in the next year or so, it's going to be soft and maybe flat. So on the revenue side, we're not going to see much of an increase. But we are seeing a huge amount of new projects. Everybody is trying to get projects across the line. At Gastech, it was almost like a joke. Who is not trying to promote a project? There are projects not only in the U.S., which I know a lot about, but I ran into people who are putting together projects in Nigeria, in other parts of Africa. Mozambique's talking again. Argentina had a big booth, and they're massive as well. So, and Canada, of course, there's suddenly the euphoria in Canada is back, and I think we have to temper all this, because in the end of the day, you can't change certain facts, such as you need a long pipeline, and not everybody has access to the pipeline, and the pipeline costs $10 billion in Canada. So, how are you going to get that to get paid for economically? You can have the cheapest gas in the world, but when you got a $10 billion pipeline, you got a problem. Now you have projects like Alaska that seeming to be making progress, but again, there's a long pipeline to pay for, and I'm just not convinced that those costs have been internalized in the cost of LNG that they realistically expect to achieve. So on the revenue side of the equation, I don't see prices going up very much in the near term. Hopefully in the midterm they do. But in the end of the day, they're not going to rise fast enough to absorb some of these crazy projects that are not only coming on now, but also will be coming on in 2, 3, 4 years from now. So there's a lot of new capacity going to come on that if they get to FID this year, we'll see the production in 3 or 4 years. Now, on the other side, we have obviously a lot of production coming on. We have potentially, we're going from 450, 500 million tons to 600, 700 million tons. That's a lot of new demand that I think will be there, but will it be there in the term that the new production is going to show up? I think there could be some blood in the water, because a lot of these new projects, the off takers are actually the trading companies or the aggregators. These are not the end users. The aggregator model is very simple. They got to buy low and sell high. If they have to buy high and sell low, that doesn't work. And why do you think they'll have to buy high? Is because on the other side of the equation, we have capex. And that is like the dirty little secret that I think people are not talking enough about. Capex has gone up dramatically in the US and also in Canada and also elsewhere. We are seeing costs of 30, 40%, potentially more than they were a few years ago. We saw projects like wood fiber announce that their cost is now $2,000 a ton. Yes, we can make arguments whether wood fiber is unique or not unique, etc. That's not the point. The point is we're not going to see low capex anytime soon. And that's partly because most of the projects are concentrated in a very small area. And so there's a huge demand for resources in that area: welders, boilers, construction crews. Steel prices are still high. Interest rates are still very high. This is not a good time, in my view, to FID when interest rates are so high. I would wait 6 months when interest rates are probably going to be lower. So you have project costs which are highly dependent on capex, which and interest rates and steel prices, and of course the big unknown is tariffs. We have no idea what tariffs mean, and for the US projects, are they in, are they out, etc. But this is the cost that has to be borne by the project developer, because the EPC contractor is typically not bearing this thing, and the financiers are not bearing this thing. So project developers are taking a big risk by trying to declare FID as fast as they can. Aggregators are taking a big risk by signing up to these long-term contracts on the assumption that they can continue to buy low and sell high. I think they'll end up buying high, because a lot of the contracts will have to be renegotiated when the prices finally come in, or there's going to be a lot of very unhappy bankers or project developers. But the market may not be willing to pay a high price when there's so much new volume coming online, especially when we have the big unknowns like China. China has shown that it can buy American LNG, but trade it out in the open market and not actually bring it to its shores. So we are not seeing the Chinese demand directly linked to the American production. And if China is now thumbing its nose in the US and buying Arctic 2 and any other sanctioned gas it wants, well, then we have a problem that the market is likely to stay soft, because everybody's driving the prices lower and lower. If China is going to buy Arctic 2, what stops India from buying Arctic 2 and everybody else? So my concern is there's a lot of hype, there's a lot of excitement, not many people kind of looking a bit more conservative, not many people really thinking of the implications. It's a bit like the dot-com boom. We are looking at the wrong metrics. The metrics we're looking at is how many million tons can we FID versus how many million tons does the world incrementally demand need, and can it absorb, and keeping a price that's sustainable for all of us. So I have a sinking feeling right now that this could end quite badly. Now, what does it mean? For projects like mine, like Gulfstream, it's a great time to get permitted. And so that's what we're going to do. If the permitting is easy, let's go for it. Is it a great time to FID? I don't think so. But I'm in no hurry to FID. Once I get the permit, we'll assess the situation at that time. And if it's a good time to FID, i.e., prices are coming back up and capex is coming back down, yes, we might FID. But if it's not, I'm not going to FID. But other people, especially at Gastech, they're tripping over themselves trying to get to FID, and I think that's not good. Another good data point, if there is that when NextDecade announced its expansion FID, its share price went down 20-30%, because the smart money knows the equity investors are going to get squeezed in a down market where projects are project financed. The bankers who loan the money have their margins locked in, and they are first in line now. If things go really badly, they could be left holding the keys of a project, a half finished project that they don't want. But assuming it doesn't go that bad, the bankers will be okay. The off takers, if their contracts are strong, will force the low prices to the developers. The developers will get squeezed, and the equity investors in that developer will get squeezed. And that's what the market showed with NextDecade. NextDecade announced an expansion FID, and the stock price went down 30% or 20-30%. I'm not sure it's recovered, but I don't think it has. So I'm usually the most bullish person on LNG, but right now, irrational exuberance is the words I would use. Let's slow down. Let's bring the right amount of volume to the market. Not every expansion needs to get FID'd at this time. This is an overheated construction environment in the US, especially around the two or three regions that we all know about, the Calcasieu region, the Plaquemines region potentially, obviously the Corpus Christi region. These are, and maybe the Brownsville and Texas LNG gets to FID as well. These are overheated markets. We don't need to FID, and I don't think we need to FID a lot more new projects around the world either right now. Maybe it's time to, bring in the volume at a gradual pace that keeps up with the growth in demand. Right now, I think the supply is going to exceed the demand. The incremental supply is going to increase incremental demand. And as we all know in economics 101, that means price is going to come down. Prices are going to come down. Who's going to get squeezed? The guys who sign the contracts, who are not actually the end users of the gas. So the trading companies, I think, are going to be in a bit of trouble. Aggregators, the Totals, the Shells, the Exxons, they're not buying when they buy off their own projects or other people's projects. They're not buying to consume the gas themselves. They're buying to flip it. Well, if they can't flip it at a very high price, then they're left holding the bag. And they won't take it from the developer, and then the developer is left holding the bag, and then the developer is going to squeeze out of the equity investors. So I think it's a great time for like what we're doing, which is going to get permitted. Let's go through the permitting process and assess the situation. It's not a good time, in my view, to be pushing yet another project through FID, which is what I saw at Gastech, and I think I saw too much of it. So on that note, let's slow down, guys. We don't, it's not a mad rush to the door. It's okay to wait for the right time. It's okay to wait for the capex to come back down. It's okay for the interest rates to come back down. It's okay to wait until we know what the tariff situation is like. It may be okay to wait till labor costs come down in certain parts of the world. Thanks.